Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video, we are looking at two high growth stocks that you could potentially add to your portfolio. There's a lot of madness going on in the market right now. So many companies are down in the last few months. In just the last 6 months, there's so many companies. Look at this madness. Microsoft is down almost 23%, okay, and so on, so on, so. So what we need to do is look at these companies and see if we can invest in this type, like find a great company like Adobe, 40% down in the last 6 months. So what we need to do is just have a look at these companies and see, inshallah, if it's a good fit for our portfolio and so on. But before we do that, I share a lot of videos every week and I'm sharing my portfolio. I've never hidden anything from you guys. And I'm trying to be transparent enough to help as many people as I possibly can. All I need you to do is just give the video a like, okay? If you haven't subscribed to the channel, please do it as well. If you haven't opened that notification thing, do that as well. That will really help the channel. I really appreciate that. Thank you very much. Right, so in the last video I shared this with you guys. If you haven't seen it, go and watch that video. Great video. But in today's video, I just want to make sure that you also have an idea of what's going on in here, right? Because one of the reasons we're looking at this is to find out great companies that are right now being sold because of this madness that's going on here. The euphoria is over. We're now in a situation where we are in a panic or denial situation going on. People are selling their stocks because they no longer want to be in the stock market. People are angry maybe. We haven't got to that stage yet, but the panic, we might be getting there, okay? Because there's so many like great companies being sold every single day and it makes absolutely no sense, okay? So we get into that stage and then you need to sit back, make sure you have your plan in place, make sure you got your watch list and all that stuff, and have some cash around and just say, okay, this is crazy, but what can I buy? Okay, what are some of the great companies that I believe that will be around for a very long time? And that's your job. Once you got that, hey, happy days. Okay, and one of those companies that I think is worth looking at right now is Nvidia. Nvidia's come down quite a bit, okay? So since the beginning of the year, it's down almost half, 50%, closer to 50%, 46.30%, okay? In the last 6 months is almost the same, obviously, and then 27% just this month. 27% just this month. Just this week, 13.63% just this week. It feels like it's not basically this week has been absolutely crazy for growth stocks. Actually, not just growth stocks. All stocks have been hit really hard just this week. So yeah, so we need to look at this company and see if it's actually worth investing in this company. This is one of the companies that I really get excited about every time I basically talk about. It's not in my portfolio, my main portfolio yet. It's in my kids' portfolio, just a little bit of it. I'll be honest with you, there's not a lot of money in that portfolio. It started very recently, and Nvidia is one of those companies because I believe this company will be around when my son at least is 18, 19, 20 years of age, and he would understand the type of company it is because they will be around, trust me, okay? When it comes to, so they are dealing with GPUs in terms of PC gaming, data centers, driverless cars, you name it, okay? And I was looking at this in Morningstar, and I was looking at this and thinking, it's really important. Like all of these companies, so the Microsoft, the Metas, the Amazons, the Alphabet, all of these companies are competing for more or less similar things, and that's just to basically create products that no one else is using, advertise things in YouTube and whatever, the Netflix, the Amazons. But all of these companies, in order to achieve what they want to achieve, they have to have fast computers. They have to have computers that are very powerful, and the company that can allow them to do that is Nvidia. Okay, Nvidia's products actually enables these companies to do what they do, from data center to AI and so on. Okay, all of these things, like for example, if they talked about here analyzing 10,000 pictures and looking at what, that's AI. Okay, and that's something Nvidia is working on. So I genuinely think this is one of the best companies. It is in the right industry, and right now it feels it's actually down. So let's have a look at in terms of the financials. Okay, currently trading $161 per share, EPS $3.85, market cap of 192, and I think there at some point it was almost 600 billion dollar company, but it's gone down quite a bit. Okay, economic mode obviously is a wide, capital allocation is brilliant, beta is quite high, because obviously it's a high growth company, and it's one of those stocks that every single day you see either up 3% or down 3%, so you have to be careful with that. PE obviously high, price to free cash flow obviously high as well, because of the growth and expectations people placing on this company is quite high. Dividend yield, it might not as well pay any dividend, but it is there at the list. 5-year growth rate about 6%. 9 years they paid 9 years. Wow, that's madness. Okay, payout ratio just 4%. 4%. Can you believe that? So they might as well increase it to 20% and give us a little bit more money. Dividend safety, again, I say those things, but genuinely I would like the company to reinvest that money so they grow the business rather than just pay out as a dividends. Okay, once it becomes a very mature company, then I don't mind that. So dividend safety almost 90%, free cash flow basically $8 billion. Now in terms of profitability, we're looking at about 26% of profit margin, operating margin 37, 20, did I say 26? 36, 37, 44 return on equity, revenue growth 61% a year on year. Okay, return on equity in the last 10 years, we're looking at 48%. Now, tiny little bit dividend, the rest of it is probably price appreciation, obviously, and current ratio, we're looking for anything above 1, and as you can see is way above that. Now in terms of valuations, what the analysts are expecting, they expecting this stock to basically the earnings to grow almost 31% next 5 years, every single year in the next 5 years per annum. Okay, Simply Wall Street actually valuation says is about 6% undervalued at the moment. Their price target is $176 per share, and it currently is $161 per share. As you can see, fair valued according to Morningstar, fair valued about $200 per share. At tip rank is actually ridiculously saying it's got almost 100 something upside. That's madness. 327, and it's a strong buy. I'll be honest with you, right now the way Nvidia is, the way things are going, I will say it's a buy. Okay, I don't know strong buy, but what I will do if I were in your situation and you are really basically interested in this company, and I'm not a financial advisor, but I'm telling you what I would have done, right? If you're bullish on this company and you're already owning your portfolio, or maybe you would like to add this to your portfolio, don't just put £1,000 in one go, $1,000 in one go, right? Dollar cost average, because the way the markets are going right now, the momentum is downwards. We don't actually have a momentum upwards. You might have to be careful until possibly July. We might be in that situation. So maybe just every single week or month or whatever, just buy 2 shares, a share, whatever it is. Okay, dollar cost average into it, so you kind of like average it out possibly to the low end rather than just paying for. So basically what I'm trying to say to you is, instead of buying £2,000 worth of stock in one go, just split that maybe into 4 or 5 different basically purchases, and that hopefully will help you in the long run. Okay, and that's what I would have done if I was in your shoes. So the question now is, am I adding to my main portfolio? I'll be honest with you, I'm tempted. I'm really I'm tempted right now. But the issue is, I have so many, like I've said before, I own so many. I have more money invested in tech companies than the rest. And for that reason, my portfolio has been quite volatile lately. And I'm trying to reduce that volatility. It's like I said at the beginning, it's actually in my kids' portfolio, although it's very small shares. Okay, it's in there at the moment. So I'm going to keep watching this. What I will do, I'll tell you this much. If it goes down to $120 per share, not what they're saying here, because I genuinely feel like I need a bit more than that. I need a proper margin of safety. If it hits 120, I will not hesitate buying about 5 to 10 shares of this company. Genuinely, if 120. Again, that means it has to go down to $41, okay? And it is possible to see that, because at some point at the beginning of the year, okay, it was trading January the 3rd, it was $300. It's almost half of that. So another $20, I don't think that's too much to ask. And that's my plan. If it gets to that stage, I think I will add more. I added this to my kids' portfolio, I think when it was like 170-ish or whatever it was. Okay, I think it might be 180, I can't remember. Okay, 170, 180. That one I don't really care, because that's going to be for their future. Like, this company will bounce back by then. Okay, but I need to like a not quick turnaround, but I need it a little bit more than that. So yeah, 120 is my price target, and that's where I stand with Nvidia. So some of you have asked me this question, that's why I'm answering directly. But please remember, I'm not a financial advisor. I'm just going through by basically what I see in front of me right now, and my guess, and basically what I've seen in the market in the last few months, okay, or maybe years. Right, the next company we're looking at is probably new that we were doing this, because AMD is another great company. And that company is down so much right now. Let me just show you what the graph looks like. So when you look at the year to date, it's down 42%. Very similar to Nvidia, okay? And right now, it's just the last 6 months for about 40%, 10% about just in this month, and in the just last 5 days, it's down about 8%. Now, so this is another great company in terms of their products. They create all the CPUs that are used in the data centers. Okay, so a lot of the data center companies, right? So the Microsoft, Amazon and Microsoft and Google's, for example, they have CPUs that were designed by AMD, possibly manufactured by Taiwan Semiconductor or Global Foundries, are in those data centers. And what is happening is, right now as we speak, this company is doing really good because of what's happening to Intel. So they had obviously their main competitor in data center, in PC, in game, whatever it was, apart from gaming, it always used to be Intel. But Intel is not doing well. So what AMD is doing right now, they partnered with TSMC, and they offer highly competitive chips that have reached parity with Intel's offerings. So Intel, although they are down right now, they're not out yet, because I'm sure in the next 5 to 10 years they will come back, especially as Intel faces manufacturing delays in recent years and so on. And that's one thing that hurt Intel so much. So Nvidia has actually taken over and now is the main player when it comes to all of these data centers, when it comes to gaming, when it comes to all sorts of chips, basically data related or computer related performance, CPUs and so on, right? So yeah, just looking at this, like I was reading this whole thing, and I feel like, you know what, this company, it is in the right industry. It has right now what I would call a competitive advantage, okay? Although it's got a narrow competitive advantage over Intel and so on, it is still a great company. It is still actually one of the best out there. And right now it's actually down a lot. And I don't think it's actually fair, I'll be honest with you. So let's have a look at the details, and then we'll take it from there in terms of the financials. So $87 per share right now, 2.68 of EPS, market cap $136 billion. Okay, it has a narrow economic mode, like I said, but the company is doing really well, or the management doing really well when it comes to allocating that cash. And then beta is quite high, okay? PE is quite high, price to free cash flow is a little bit high, and they don't pay any dividends, okay? But they have a free cash flow here of $3.3 billion. To me, I was really surprised that they don't have any more than that, because a company in that sort of industry, I normally expect tech companies to have a little bit more cash than that. Profit margin is almost 20%, operating margins over 22%, return on equity almost to 48%. In terms of the revenue year on year percentage wise, 65%. Okay, and then the total returns in the last 10 years, you almost gain about 30% on your money. And current ratio way above 1. In the next 5 years, okay, the Yahoo analysts are expecting almost a 33% growth every single year. For that reason, simply Wall Street valuation is 40% discounted at the moment. $146 per share. Same goes with Morningstar, $130. TipRanks is saying the same thing. 132, 130, 146, and is a moderate buy according to TipRanks. Now, like I said, again, I will say is a moderate buy for me. If I was interested in this company, I will dollar cost average absolutely. Now, would I be adding this to my portfolio? I'm not sure, and the reason is because I already have quite a bit of exposure when it comes to semiconductor companies, and the one I'm really interested in, although they're not direct competitors, is Nvidia. I prefer Nvidia because of where it is, because of everything to do with the AI side of it, about the data centers, about the gaming and so on. Nvidia is all in the gaming side of things. It's also in the AI because of the chips that they're producing. But I feel like I would prefer Nvidia. I haven't made a decision yet whether I will add this to my portfolio. But if I were to add again, okay, because right now it is about 87. I used to own this, by the way, a long time ago. I think I bought it when it was like 50 or 60, whatever it was. It ran up all the way to 100 plus. At some point, I've sold out. I only had, I think, 5 or 6 shares, so I sold it, made a little bit of profit and took that profit. So yeah, if I was to buy this, I'll probably buy in $70 per share. If it hits $70 per share, I think I will be interested, even if it is a trade and maybe hold it for about a year or so and then sell it, okay, whatever. I would definitely be interested if it gets about $70 per share. That's my take on an AMD and Nvidia. Like I said, they're both amazing companies. But for me, I own Qualcomm, I own Broadcom, I own KLA, I own so many, and I own little bit of Nvidia in the kids portfolio. So I feel like I own too many chips from basically semiconductor companies. For that reason, I might not add to AMD. But like I said, if the price is good, okay, for this reason only, okay, for this only, I would definitely wouldn't mind. But remember, 2 things I want to say before we actually finish this video. This is the past, okay? All of this information that you see here is the past. Again, for that reason, we can't rely on it. But if they can repeat that again in the next couple of years, then you will be happy. This is also what the analysts are thinking based on their analysis, whatever, right? So you have to be careful. Even though it says 32.8%, they might only make 15%, but 15% for me is more than enough, okay? I own companies that are only doing 3 to 10%. That's life, okay? Right, I hope you enjoyed the video. If you did, please like the video, subscribe to the channel. Let me know if you have any questions. Assalamu Alaikum, take care.